Welcome to No Nonsense Nonprofits. Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can focus on creating a bigger impact. Today, we're going to be talking about the statement of financial position. Many nonprofit leaders focus on fundraising and program impact, and these are important. But the long-term success of our organizations depend upon understanding the organization's financial health. So I encourage you to ask yourself, if a major grant were delayed, could your nonprofit continue operating? How much funding is available for day-to-day operations? The statement of financial position helps us answer these critical questions by providing a snapshot of your organization's financial health. Today, we're going to be talking about the purpose of the statement of financial position, its three key components, recognizing indicators of financial strength and potential risks, and using the report to support better financial health for your organization. So let's get started. What is the statement of financial position? Well, it provides a snapshot of your organization's financial condition at a specific point in time. It answers three important questions. What does our organization own? What do we owe? And what remains available to support the mission. It's one of four core reports required by generally accepted accounting principles, but it's also commonly reviewed during an audit for grant applications, loan requests, and of course, internal purposes like our board meetings and our management team. The report is divided into three sections. The first one is assets. Obviously, this is what your organization owns and represents the resources that can help you carry out your mission. Common assets are cash and cash equivalents, investments, accounts receivable, grants receivable, prepaid expenses, and then our fixed assets like buildings and equipment. It tells us, do we have enough cash available? And are we waiting for large grant reimbursements? And are our assets growing over time? Healthy organizations don't just have assets. They have assets that can be used when needed. And this report helps us with that. The second section of the report is what your organization owes. It's the liabilities section. Examples are accounts payable, payroll liabilities, lines of credit, loans, deferred revenue, lease liabilities. Liabilities aren't necessarily a bad thing. Many nonprofits borrow responsibly to purchase facilities, invest in technology, and expand programs. The key question is whether those obligations are manageable based upon our available resources. And then finally, the third section is the net assets. That's what's left over from our assets after paying off all of our liabilities. Now, today we recognize two sections of net assets. The first one being net assets without donor restriction. These are generally used for operations and strategic priorities. Things like membership income, program service revenue, most unrestricted donations, and board designated reserves are examples of what we can use as unrestricted or without donor restriction. And then the second section is net assets with donor restriction. These funds are used according to the donor's requirements. They may involve a specific program, a future time period, or maybe an endowment fund. Currently, we no longer have sections in the net assets for permanent and temporarily restricted. But I do want to tell you that there's some extensive disclosure requirements in the notes to your financial statements about the nature of your net assets, especially if you have an endowment fund. So while there's only two categories required, we may want to break those categories down by grant or endowment so that we can make sure that we have those necessary information for those disclosures. So let's talk about how we can use the statement of financial position. First and foremost, to evaluate liquidity. One of our first questions that we should ask is, how long could we continue operating if revenue stopped tomorrow? Many organizations aim for 3 to 6 months of operating reserves, and healthy liquidity helps us provide flexibility during funding delays, economic uncertainties, and during emergencies. The other thing is monitoring our financial trends. I encourage you not just to look at 1 year statement, but compare it over several years. Look at things like cash. Is it increasing or decreasing? Are our liabilities growing faster than our assets? Are unrestricted resources improving? And is the organization becoming more financially resistant? These trends often reveal more than a single snapshot could. The other the statement can do is help us support our strategic planning. We can look at if the organization is financially prepared to launch a new program or hire those staff or make those purchases, pursue a larger grant, or invest in technology. Financial decisions should always align with the organization's capacity, and the statement will help us determine that. So there's a few warning signs to look for when you're evaluating your statement of financial position. Do we have declining cash balances? Is our debt increasing? Do we have limited unrestricted resources? Even if we have a lot of cash in the bank, if a lot of that is donations with donor restrictions, they can't be used for day-to-day operations. So we really need to watch for how limited we are in our unrestricted resources. Do we have a heavy dependence on one funding source, and how would that affect our organization? Do we have negative net assets? That means, do we have more liabilities than we have assets? That is not a good sign. And do we have difficulty meeting any of our short-term obligations, our payroll, our accounts payable, the credit card bill? Thus, again, another sign that we have some things to work on. Now, these things are not necessarily signaling failure, but they do warrant closer attention and proactive planning, and this statement helps us see that. Positive indicators for financial health are strong liquidity, of course, stable cash reserves, balanced debt levels, diversified revenue sources, consistent financial reporting, and transparency with our stakeholders. So to summarize what we've talked about today, the statement of the financial position is more than just a balance sheet. It's a strategic decision-making tool. It helps us as nonprofit leaders understand what the organization owns, owes, and is available to support its mission. Monitoring assets, liabilities, and net assets allows us to assess the financial stability and long-term sustainability of our organization. Reviewing this statement regularly helps organization identify risks early and make informed financial decisions. Remember, a not-for-profit's mission may inspire donors, but sound financial management sustains that mission. So I encourage you to review your most recent statement of financial position, not just during audit season, but throughout the year on a regular basis. Discuss things like liquidity, reserves, and financial trends with your finance committee or board, and use the financial statements as planning tools rather than as simply as a compliance document. A financially informed leadership team is better equipped to navigate uncertainty, seize opportunities, and ensure long-term mission success. I hope this was helpful, and if you have any questions on this or other topics, please put that in the comments section below. Of course, we always appreciate your likes, and I want to thank you for joining me today. Remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.